the story quite nuanced, because we can have an investor sitting here and an investor sitting there, and they'll tell us that actually the remainder of the year is not dependent on the DC Trump agenda. But apparently to BlackRock's Larry Fink it is. Where do you stand?
I think that it's partially dependent on the Trump agenda, so I guess I'm going to just kind of sit uncomfortably in the middle of the fence there. You know, some people say it is, some people will say it's not. I'll say that it partially is. I think that the market rally has really been driven by three forces. The first is that the central banks are still broadly accommodative. European Central Bank is still doing its asset purchases. The Fed is going to take it nice, take a low and slow approach to hiking rates. Economic data back at the end of the summer started turning more positive. I think that helped. And then also you had the outlook for regulatory and tax reform supporting U.S. equities in general. So at this point, Larry Fink says that the market is fully priced. I think this is a bit like Fed speak as far as, okay, well, fairly priced, fully priced, what does it mean? Fully priced, I think, means that it's like, well, the risk is a little bit more to the downside. I view it as it's a little bit more to the downside, maybe in the U.S., especially small caps that seem to be dependent upon tax reform. But outside of the United States, that's where I think that things are not maybe fairly priced, but maybe slightly less than fairly priced.
Let's go from asset class to asset class and think about the consensus trades at the start of the year. Long stocks, long the dollar, short treasuries. Relative to the price where we are now, what is more dependent on the Trump agenda?
I think that stocks are dependent upon the Trump agenda, at least small cap stocks, because they tend to be the higher taxed ones. And if you look at the PE expansion that took from the election day until the present, I think you can tie quite a bit of that to the improvement in the earnings outlook, but a good chunk of it, at least a third of it, is probably due to the prospect for tax reform. So if that gets punted or watered down, I think you could have perhaps a slight drift lower with small caps. But if you look at emerging markets, I think those are actually somewhat have been positively affected by the setback to the Trump agenda. Because when Trump was elected, you saw the peso selling off, you saw emerging market assets in general selling off, and now it looks like, well, maybe he's not going to be able to push forward with his protectionist policy. So that could be a good thing.
Is that why we're seeing so many tech companies reaching record highs, because they have nothing to do with Trump?
Yeah, it is somewhat. And plus, if out of the election to the or until the point when he was inaugurated, they were lagging. And so you just see this rotation. They were lagging because they're the multinationals. They're dependent upon a lot of immigrant labor selling into foreign countries. So in a way, they're beneficiaries of this setback. That's why, it pays to diversify. You've got some of the small caps, you've got some of the large caps that tech-oriented. You're somewhat diversified against policy changes.
Take the other side of Alex's question. Citi's out with a note saying actually it's time to buy the Trump trade because it's been so deeply discounted. If you wanted to buy equities, a sector of equities, on the chance that Trump really will come through with fiscal stimulus, what would you buy?
If you think that he is going to come through, I'd say small caps in the United States are probably the most highly leveraged to it. You just look for which are the companies that are most highly taxed. Probably energy is going to be a beneficiary, especially small cap energy, because U.S. energy companies are profitable at much lower price points now. Smaller cap stocks were beaten down the most in the energy sector. So I'd say that's probably the way to do it. And it's almost as though we went from high hopes to low expectations pretty quickly here in the markets.